Good morning, guys. Good morning. Good morning. Hopefully everyone is okay. I've had some time to sleep a little bit, and so let's just get started. Before we begin, on the screen you do have a trade that I'm in right now. I took this long on NQ. I got this has never happened before. I've never taken a trade while I'm doing a live, but right now if I'm looking off to another screen, it's just because I'm live in the trade. I took this long right here. You guys are gonna very shortly learn a lot of the details of how I take trades and like what I'm actually doing, but I'm in a long position on NQ. I took the long entry off the snow line. I took it at 820. I just signaled in the alpha channel that I took this long. And right now I'm hitting a target area. So I'm up, if you can believe it or not. I catch 80 to 140 point moves. It happens pretty regularly. So right now I'm up about 170 points on this trade. So I took 3 contracts. I'm up. So I'm going to go back and forth with this position. I moved up my stop loss already. It's in my broker. So if you just see me looking at a different screen, it's just because I'm managing this trade. But let's talk about the bounce that we saw in the market. Obviously, we all know, I don't have to tell any of you, that market is not in the most conducive arena. Now, what we want to know is, what are we doing here with the indexes? I'm pretty sure all of you want to know some opinions. I made a video last night, right? If you guys are not following along with what we have on YouTube, I'm making videos. I'm making a lot of videos, and I want to do it on a daily basis. I want to review my trades, and I also want to talk about what it is that I caught, what it is that I didn't catch. Yesterday I caught 1,600 points on NQ. It was 1,600 points, and our alpha members also caught them. I caught a short right off market open. It was a short. It was 300 points. And then I caught the biggest trade of my career for futures. Not the biggest trade, not the most money I've ever made, but it was a considerable amount. But check this out. It's all about the detection mechanism. I detected that we had volume come in, and then I took this trade. I didn't take this trade right here. I took this trade right about there. So I took that, and the damn thing, I thought 300 points was already good enough, man. And I was like, yo, this trade is now at 1,100 points. I took that, and then I took this final trade towards the end of the day. So it was a wild trading day. I don't know if you guys were able to catch some of that movement and some of that volatility. That volatility came in for a specific reason, right? It's a little bit more of a political reason, but I mean, the trade was there. So what are we looking at? What are we going to look at for the broader context? I don't want to come on here and say, hey, look at all the money that I made and look at all the trades that there's no point to that. The point is learning to recognize and doing it for yourself, right? That ultimately is our goal for everyone. We want to not just show you all the trades that we take and the fact that, we made a little bit of money, despite the fact that I'm down. Don't think that I'm up for the year. I'm not up for the year. My portfolio, my net worth has been pretty much slashed in half, right? So I don't like coming on lives, and I don't like making videos if I'm not going to be completely transparent about where I am with my portfolio and my gains. I don't like doing that, and I will never do that. So what are we looking at in terms of QQQ? Let's just look at some levels, man. I'm sure all of you are dying to buy into Qs. I already bought the dip on the Qs. I'm down on my dip. My dip position is down probably about 25%. So let's just check out some levels here on the daily time frame. Let's remove the voodoo lines real quick because I'm using them. I'm using them to tell me intraday levels. And let's remove any indicators we have, and let's just strictly look at levels, dude. On the daily time frame, we're going to use retracements. If you don't know how to use retracements, there's really good videos out there on YouTube. Some of them are a little bit on the longer side. They're about half an hour long, but they're well worth your time. You can literally learn how to do a lot of the things that we discuss, or a lot of things that I use. You can learn a lot of institutional trading techniques just by watching a couple of videos. You just need to know which ones to watch. So if you guys are interested on any retracement videos, let me know in the comment section. I'm going to read that up, and then I'll post the videos, okay? Because Fibonacci retracements is a huge concept in trading. So let's check this out. In terms of retracements, what levels can we be trading back into, or where are the significant levels? I'm going to give you a little bit of an educational session today. We already know that the VIX is very high. If you don't know what the VIX is, it's a volatility index. It's going to tell you how much panic and the validity of that panic within the market. So that is very high right now. Let me prove that to you, right? I took a short on the VIX. I explained this yesterday in my video. My video was 1 hour long, right? But I explained in very great detail why I shorted the VIX, where I shorted the VIX, and now I'm up on it. I'm up on it a few ticks. I'm up considerably on this VIX short position. I do want to take another VIX position because I want to signal it for the people that are in the Discord. I don't think that volatility has subsided. If it starts to subside a little bit more, then we might short it at a lower threshold. But I would prefer that it jumps back up one more time, and then from there we can short it. So let me get back here to the point on QQQ, right? We're going over retracements. Where are the activity levels that we could potentially see? Where do you think that I bought the dip, so to speak? When I was doing my retracements, I was using this as my anchoring point, right? So I'm going to anchor this here real quick so you guys understand. Why did I buy on QQQ for the first time? Because when I was using my first anchoring point, I thought that we were at 61.8, and I thought that it was already significant enough. The two retracement levels that are going to be usually the ones that you want to pay attention to the most when we're looking at pullbacks. This works when you're going for short positions as well. But when we're going for pullbacks, you want to pay attention to 61.8, and then you also want to be paying attention to 78.6. These are two specific levels where if you have a retracement after a run, right? Because all things considered, we wiped out all the gains for 2024. Granted, I know we're there. I definitely get that. But we're still on the weekly time frame. This isn't going to change. The market is still overall overwhelmingly in an uptrend. Does it hurt? Does it suck? Am I down a considerable amount of capital? I'm sure you are as well. I'm sure you guys that are listening are down as well. But let's not make emotional decisions. I don't like talking about emotions when it comes to trading, right? Even though I'm a pretty emotional person, it has no room in trading. So let's go back here to the daily time frame. Why did I buy into the Qs the first time? Because I was hoodwinked. I literally was hoodwinked. I thought this is my control. This is just a very simple indicator that tells me if we are crossing on the 5 and the 21. Right there on that green little bar, hopefully you guys can see this. On that green little bar, this is where I thought we were going to start to constitute a reversal. Why? Because we were right at that 61.8 threshold. Now that we have broken down lower, now that we have penetrated all of the fib retracements that we saw there on the daily time frame based on the anchor that I picked, now I have to go back here to the weekly time frame and we have to use this as a basis. So instead of anchoring here, because we've already hit the full retracement, you understand what I'm saying? The full retracement from the top all the way back to this anchoring point, it's no longer, there's no point to it. There's no point to it. So we have to pick the next point of where we saw a huge move in the market. That's all the way back down here at 340. So let's remove our controls. Obviously, my 5 and my 21 is going to be pointed to the downside. This is a little trick that I'm sharing with you, right? The 5 and 21 is a trick that I learned years and years and years ago. I didn't think that it was applicable, but I find that a lot of things that I learned 15 years ago are still very much applicable today, especially when we're looking at value investing and value trading. Probably a lot of you don't know what that is. Value trading is for you to look at the market a little bit on the higher time frames and look to take your positions trades. Positions trading is not something that people generally do, especially if you're on the younger side. You're generally looking at the 5-minute time frame and looking to take trades there. But now I'm showing you the weekly time frame. So the weekly time frame, let's put that into context. If we're looking for potential buy the dip situations, this is going to be one of those areas. So 420. What is the area below 420? My cat is wearing a sweater. I had no idea that my wife put a sweater on him, but sorry, so I got sidetracked. What would be the next level lower? It's going to be 78.6. Where is that going to bring us overall? This is a swap area, right? I'm not making up these terms. These terms actually exist in the market, and these are actual technical concepts that we need to pay attention to. What is a swap area? I'm going to explain that. Wherever you see resistance in the market, this right here was a previous resistance at some point in time back in November of 2023, not 2024. So that was some resistance. We had that twice. This area has been resistance historically. So trading back down into this area, if we do get to that area, this is probably going to be a fairly decent buy the dip area. We're already at one of those incremental points. Look at this freaking wick, right? If you are a little bit older, if you're a little bit older, if you've been trading for a longer period of time, this market is very scary to you. If you started trading during 2020, during the GME phase, or maybe just recently, maybe you're a newer trader, you're looking at the market and you're like, this is no big deal. This is a big deal. This is a very, very big deal. The wick on this one candle was 10%. A 10% wick intraday? Are you kidding me? Right? That's not normal. Those things, it's not a normal thing to happen. It's just way, way too much volatility. Very, very, very strange price action. But here we are, right? This is the era of just wacky candles or wacky wicks. That's just on the weekly time frame, right? Okay. So what do we have? Is this a potential bounce area? I would say that it is. I would definitely say that it is. But in my particular opinion, I'm going to say off the daily time frame, I'm going to be waiting for my control. My control is the 5 and the 21. I'm not going to use the 5 and the 21 cross off the weekly time frame. I'm just using this as context. When I start crossing off the 4-hour time frame, when I start seeing that, right? When the moving averages are telling me, hey, Sage, I think that the crowd, the short-term bulls, very short-term, 5 days, right? Because you see how quickly the market can turn. The market can turn on a dime. It can turn in 1 day. I'm using the 5-day moving average. So I'm delayed by 4 days. So that means that if we have a 20% candle to the upside for whatever reason, let's say tariffs are now off, the Middle East has now found peace, now the dollar is the golden standard once again, and all of this stuff now is starting to happen, and there's confluence with all these geopolitical factors. If that were to happen, you're going to have a 30% candle on QQQ. Right? I'm exaggerating, but you guys get the point. If I start to see that the 5-day moving average crowd is overcoming the 21-day moving average crowd, that's where I'm looking to start buying again. That's where they got me the first time. They got me the first time. I have to admit that. So I had a pullback from my entry. My entry was approximately right here. From my entry, I'm down 15%, right? Just on Qs per se. I'm down more than this. I'm down a multiple of this. But that means that when it starts to recover, I'm also going to be up a multiple. Does that make sense? So where do I want to buy in? I want to buy in when the 5 overcomes the 21. I've already repeated it a million times. It's in the videos on YouTube. I'm not gatekeeping anything. I'm not telling you on live, on Instagram, on YouTube, whatever. I'm not telling you and then I'm going to tell people in the Discord something else. That's not going to happen, right? All right, so my position is still doing okay. Let me just check on my position real quick. All right. Give me 1 second so I can get out of this position. I think I'm good with this return. Sorry, guys. Let me just give me 1 second. Should I hold on to that? My entry was right here. First time I take a live trade with about 150 points. I'm good with that. I'm good with 150 points. Yeah, I'm freaking fantastic with that. Right. This is where my entry was. That's no secret. My entry was there. I had elevated volume right here, and then the TTM was starting to squeeze in my direction. Obviously, I'm going to take the trade. Okay. All right, awesome. I'm out of the trade. I got a 142-point move. I'm good with that. I'll do my trade review later tonight. After I'm done with the power hour stuff, I'll do my trade review later on tonight. So my apologies. Let me get back to the point here on QQQ. Just wanted to get out of that trade. Okay, so right here on the 4-hour time frame, if we do trade back into this threshold here or this threshold, whichever one of the two, then I'm looking for that 5 and that 21 cross. That's basically it, okay? Let me go a little bit quicker. I know a lot of you guys have some questions and you want to know what else I'm perceivably thinking to buy. SPY is going to be something else. I don't buy the indexes. I never have. I have never bought an index in my life. I really haven't. I buy the leveraged because I'm not grandma and grandpa. Grandma and grandpa want to buy the index, and that's what their financial advisor is telling them to do. I've never listened to a financial advisor in my life. I literally never have. So I want to do the leverage situation. If that's not for your risk appetite, that's okay, but it is for mine. It definitely is for mine. So what am I thinking in terms of areas? I'm waiting for that 5 and 21, and let's do the retracement exercise here as well. Retracements are a very, very good indication. It's not going to tell you where the bottom is. No one knows where the bottom is. I'm sure as shit not going to be the person that's going to call the bottom because There's people that are so much smarter than I am, that have so much more experience than me, and they can't even call the bottom. So I'm not going to be the person that's going to do that. I already recognize that. So let's use our retracement tool. That's our bottom, and that's our top. Where is our pocket? Our pocket is between 450 all the way up to 480. But specifically speaking, if you want some concrete hard levels, a hard level is going to be at 480. And then below that, you're looking at approximately 450. So trading back down into those areas, what do you think you have here? You have a swap. What did I just explain that a swap is? A swap is going to be a previous resistance area that now might act as a support. Cool? Those are the two areas. Would I say, hey, everyone go out and buy as many shares as you can right now? No, because I'm not doing that. I'm not going to say to do that if I'm not doing it. I would say to do it if you wait for the 5 and 21 cross. What else? What else? What else? What else? What else do you think I'm going to talk to you about? I'm going to talk to you about Google, homie. Google is the company. This is the swap area right here. It's between 130 to about 140. So about that 10 points. So swap area, if you go all the way for a full retracement, puts you at 130. The higher end of that is going to be around 145. Do I think that Google is worth your time, your money, your expectations? Absolutely. Absolutely. It's all about intrinsic value. So if you're not considering Google, if some of you are saying, nope, I've been listening to this guy and he's been saying Google for 3 months, and then all of a sudden in the next 6 months, Google hits all-time highs and everyone is like, oh, well, I didn't know where to put my money. Well, Google is a pretty good option. Pretty good option. Next is going to be Amazon. I don't know why anyone would not consider putting their money into Amazon. I really don't. If you just look at their financials and look at their growth metrics, it's very slow. I'm not going to say it's not slow, but Amazon is the company. Amazon should not be a second consideration. It should be your primary consideration. What are we looking at in terms of retracements? A full one-to-one retracement puts us at 152. Be mindful, this is the daily time frame. Am I going to anchor all the way back here? No, I'm not going to do that yet because I want to go incrementally to the strongest moves. If we start breaking below that one full retracement, then I have to go back. Then I have to go back to this point, but we're not there quite yet. We're right at that 78.6 threshold. If we go a little bit further, it's 150. So we're currently trading at 170. I think pre-market we're at 181. Okay. So this is an area of consideration. Does it hit the 5 to 21 criteria? Not yet. Not yet. Does it hit it off the 4-hour time frame? No, it doesn't hit it yet. Am I going to catch the perfect bottom? I don't want the perfect bottom. I want to look at momentum starting to shift in the other direction. So I've already given you the trick that I'm specifically looking for. Let's see what else we have. I talked about Amazon. I talked about Google. The last thing that I'm going to bring up, and then I'm going to open up the floor for any questions. I want to give you guys enough room and enough space in order to ask whatever question that you feel you need to ask. How are you day trading, Sage? What are you looking to buy for the buy the dip, right? I'm talking to you and I'm discussing only a few. I have a couple of other I have a lot of considerations. All I've been doing is analysis recently. I haven't moved my ass out of this chair. I've only been looking at the market and seeing exactly what are my power plays. Because despite the fact that I'm down, I know that in about 1 to 2 years' time, I'm going to be better off than where I am now. It always works that way, right? I have definitely the experience enough to know that, okay, this is some hardships that I'm going through now, financial or trading hardships. That's okay. But I know how to position myself in order not only just to make it back, but to be a lot better off than where we started, right? That's just something that I picked up during the years and all the experience that I've accumulated over the years. So what do we have? Apple. Apple is going to be the next consideration. Off of the daily time frame, these are the retracement levels. I went over this on my video last night on YouTube extensively. So if you miss anything or any details, just check out the video. It's an hour of your time. It's an hour of, I would say, pretty down deep, technical, and very calculative and very quantitative analysis on things that you all can consider to buy. So where are we at on terms of threshold? We're at 61.8. Where's the next level lower? It's going to be 155. Where is the absolute threshold lower for retracements? Right now, it's going to be all the way back down at 130, between 125 to 130. Those are your three levels that I would watch for you to buy Apple. What am I waiting for? 5 and 21 cross off the 4-hour, not the daily, off the 4-hour. Okay. Apple for, I wouldn't buy Apple. I would buy the leverage shares on Apple. So that's actually at a better, it's at a much better risk reward than where we are here. But yeah, the three stocks that I talked about, Amazon, Apple, and Google, those, and QQQ, let's call that 4. Those are going to be the things that I'm going to consider more than anything else, right? Those are the things that I would urge all of you. Stop thinking about where's the market going to go for the next 5, 10, 15 minutes. I just told you what the tricks are. The tricks are going to be the retracement levels. Forget what CNBC is saying. Forget what Fox News is saying. Forget what CNN is saying. Forget these news stations, right? Pay attention to what is actually happening with inflow. Pay attention to if the institutions are buying or not. Pay attention to if there is actual options that are being purchased. Pay attention to if there's inflow of money. JP Morgan just came out and said, hey, we have another potential of moving 6 to 10% lower for the year. We're just at the genesis of this, right? Unless POTUS says tariffs are off, then I don't know what the implications are going to be. I know what it was for his first term. The first time that he imposed tariffs, we went down by 10%, and then all of a sudden we started to recover. We recovered in roughly about 3 to 5 months. It was roughly about that. It actually might have been a little bit quicker. But recovering from a 25% drop from where we are with all the implications that we have now, I don't know. No one does. No one does. This is why all the institutions, the hedge funds, all the bigger players, and people that are 1,000 times smarter than me, all of them are doing their financial modeling so they can project where we're going to finish at the end of 2025. They don't even know, excuse my French, but they don't even have a clue of what we're going to be doing for the next 2 weeks. And they have the audacity to tell us where we're going to be ending at the end of 2025. They don't have a fucking clue. I'm sorry but they don't know. They have no clue whatsoever where we're going to be ending up for 2025. So the audacity for them to say, hey, the implications for the tariffs here for 2025, 2026, and 2027, this is exactly where we're going to be with the projection or a margin of error of 2 to 3%. Get out of here, man. Tell me where we're going to be in the next week and a half. Then probably if you get that right a few times, then maybe I'll believe you. But that's where I'm at. That's my frustration as a retail trader. Because for me, it's retail traders versus all the institutional traders. That's why I became a retail trader to begin with, right? So that's where I'm at with that, ladies and gentlemen. Those are my frustrations, and those are my little tips and tricks for you guys to just better prepare yourself before you blindly start buying everything in droves. I know that a lot of you have been buying. I know a lot of you have been buying into crypto. A lot of you have been buying into equities. That's okay. But for me personally, I have my 4 swing positions. I'm in Google already. I'm in QQQ already. I already have some swings. They're down. I'm not going to say that they're up and I'm killing it in the market. I'm not killing it in the market, not at all. But I want y'all to think about planting seeds in the correct areas. Do not buy arbitrary companies. Don't come to someone like me and say, hey, Sage, do you think that Zoom is a great investment? Do you think that because the risk reward here off the 4-hour time frame, you think I should be buying into something like this where, the risk reward, let's look at the weekly and so you guys get my point. Do you think that the risk reward is worth it if I buy it here, if we're going to take it all the way to the top? That's a 500% investment. No. Think about where the actual intrinsic value is in the company, not in the company, in the stock market. Think about those kinds of things before you're looking to make investments that just just don't make any sense whatsoever. The only thing that I'm probably going to bring up is NVIDIA. I know a lot of you are interested in buying into NVIDIA. I'm not. In my opinion, I think that there's better risk reward elsewhere. But NVIDIA, for me, if we trade back down to 75, in my opinion, it will be worth my time. Let's look at what the retracement levels are, because I'm pretty sure I haven't looked at the comments yet, but someone is going to ask me about NVIDIA. So I'm going to do that analysis real quick. If I do an anchoring point, that is my anchoring point. We already have a full 1-to-1 retracement. See? So let's go to the next anchoring point. It's back down here. So what am I looking at? I'm already at 78.6. So the last frontier is 75. It's 75. Are we at fair value at 75 on NVIDIA? We're pretty close to it. Fair value is between 68 all the way up to $80, right? That is the margin of error there. So are we at fair value if we trade back down here? I think that the entire world is going to be picking up NVIDIA if we trade back down to 75. But we're trading right now pre-market. Pre-market, we're at 102. So you need to pull back a significant amount before we start looking at NVIDIA or considering NVIDIA all the way back down at 80. We need to pull back another 20%. Do you see NVIDIA pulling back another 20%? I personally don't. I think that in this particular pocket, this is already a pocket of interest. Let's see if my 5 to 21 trick works here. So my 5 to 21 trick told me, okay, here we're crossing on the short term to medium term moving averages, the 5 and the 21. Let's look at the 4-hour. Well, the 4-hour is not picking up quite yet. Are we close to start picking up? Yeah, I would say we are. Let's look at NVIDIA and let's look at the 5 and the 21. That's the 5, that's the 21. Look at the 4 hour. We're almost there. We're almost there. So if you're looking to buy into NVIDIA at 101 to 105, okay, that's fine. That's fine. I'm not interested in NVIDIA per se. I would prefer it a little bit lower, okay? So what else we got, ladies and gentlemen? That's everything that I had. Those are my grievances for the stock market. I apologize if I said anything that's out of pocket. Obviously, I'm very frustrated. Let me look at the trade that I just had on. Let me see if it would have worked out or not. So I took this NQ trade. Y'all will see my trade review by the end of the day. If I take more trades today, I'm going to explain very thoroughly why I took the trade, because I have no interest in saying, I made $10,000 today and, look at me. I don't care about that. I care about you guys starting to trade with plans and actually identifying, hey, this is what it is I'm seeing. We're doing this in the Alpha channel. I absolutely bludgeon the traders in the Alpha channel and say, yo, give me your trade reviews so I can critique it, so you can start doing the same thing over and over, so you can identify what is the buying opportunity, what is the selling opportunity, and then we go from there. That is realistically the only way that you improve as a trader, to identify and review why you took a trade in the first place, and if you managed it correctly. If you think that there's an indicator out there, or if you think that there's a system out there that's going to be 95% accurate and you're never going to lose a trade, it doesn't exist. The most important part of trading is trade management. If anyone tells you different, they're wrong. Trade management and risk reward, two of the most important concepts. If you've been following along with the YouTube videos, we don't say anything different. If you have the appropriate risk reward and you apply risk management on top of that, you will become a successful trader. I have one trader in our Discord that his win rate is 35%. 35%. 35% win rate, and he made $7,000 yesterday. 35% win rate. For some of you, you're going to say, hey, that doesn't make sense. But his drawdowns are insignificant. But his winners are massive. He took that long trade with me on NQ yesterday. He absolutely, and he didn't hold as long as I did. I wish he did. But he was like, I'm good with my money here, Sage. So I'm not going to be riding this with you. So when I took the trade, when I took the trade, I was like, yo, we're up. And I think he took the trade for like 400 points. And I rode it even longer. Because he has his own threshold for where he pulls off his position, and that's perfectly fine. I'm not going to critique that. Money is money. But stop thinking that the indicator is going to tell you every little detail of when to enter, when to exit. It's not about the indicator. It's about you as a trader managing the trade correctly and knowing your system and your numbers. All right? Do we have any questions here? Is everyone good? The crowd on YouTube, the crowd on Instagram. What do we got, guys? None of us at Goldman Sachs use Fibonacci's to analyze. That's fine. That is totally fine. How about TLT? I'm not interested in bonds. I have no interest in bonds whatsoever. Yeah, I would say that you should focus on equities as opposed to anything bond-based. I don't think that bonds is going to be well worth your time going forward. What else we have? Are you buying shares or leaps? I am buying more shares. I don't like the idea of leaps in this market condition. I would prefer to buy shares because the risk reward is there. And if you do buy leaps, you are susceptible to theta decay. Now, if you're buying leaps in the environment where the VIX or VX, I shorted VX. I'm going to tell you why I shorted VX. It's in the video, right? I put it in the hour-long video that I had yesterday. I shorted it all the way up here, specifically at the 5 and 21. If you're going to buy leaps in this environment, I would prefer that you wait for volatility to subside just a tiny little bit, because your leaps are going to be a little bit expensive. The way that options are priced, if you go off of this strategy, whatever strategy that you want to employ, option prices are horribly inefficient the more time you go out. That's how they're designed. They're very efficient on the shorter time frames, but horribly inefficient on the larger time frames. So if you're looking to buy leaps, I would probably recommend leaps specifically on indexes, maybe even small caps. Small caps are going to be underweight, especially if we're persistent with tariffs. But if I'm thinking about leaps, I'm thinking leaps about 2 years out. About 2 years out. If it's anything more short term, I wouldn't necessarily recommend it. I would just prefer to go straight up shares. Does anyone have any other questions? SOXL. I'm not that interested in semiconductors at this moment. I know that I made a lot of money on SOXL the last time. I recognized and I called out the bank boom, right? When banks were supposedly supposed to implode, I called it out. I made a bunch of money. What happened with semiconductors and generative AI? 2-3 years ago, actually a little bit longer than that, I called out the generative AI boom and I called out the semiconductor boom. I was looking at policy and I was right. I was 100% right. Where I was wrong about the bond market and I was wrong about Mexico. And I was definitely wrong about the pullback here with policy adjustment, right? This policy adjustment, I don't want to get political, but to me, it's absolute crap. I don't think that it's even worth what's going on. I don't think it's worth a kerfuffle. But for SOXL, for semiconductors, for the person that was literally telling everyone, I literally told everyone, buy into semiconductors when policy was being adjusted, and definitely during 2022, when I knew that infrastructure would need chips like crazy. I knew that, right? Because I was reading in the tea leaves at that point. At this point in time, I don't think that SOXL is going to be worth the investment or the time. I don't think that it's going to be necessarily just because it's as low as where it is and you have this retracement all the way back down here. Just because it's there, I don't think that it should be necessarily a consideration. What's going to drive the difference of opinion that I might have is going to be some sort of policy adjustment. If we don't have that policy adjustment, then I'm not that interested in SOXL. That might change. It might change in a week. But for right now, this is off the table. What else we have, ladies and gentlemen? I know I know that a lot of people under me made six figures trading SOXL. All right, I was one of them. I made so much money trading SOXL when I bought into this at like $8, right? I rode this from $8 and you guys, I mean, the rest of the story is here. Pay attention not just to what the charts are saying. Pay attention to what's actually going on around the market and what policies are looking to support or not support. What else we got? Does anyone have any other additional questions? Should we buy GGLL or just Google? I'm going to tell you what I bought. I bought leverage shares on GGLL. I'm not telling you what to buy. I'm not telling you. All I'm saying is that I have a different time horizon and I have a different risk appetite. I like leverage shares when they are heavily depressed the way that they are. You might disagree. You might say this guy's an idiot. That's fine. I don't give a shit. All I care about is how much money is in my bank. If I can look at the risk reward and then say, hey, if I have the right time horizon on this and I have the right risk appetite for this, how much of my money am I looking to put onto risk? Am I going to put 80% of my portfolio into Google? No, probably not. But I will take about 4 or 5 different positions where I'm allocating 10 to 20% on these given positions. If you need the capital in the next 6 months, you might be hard pressed and you're going to feel a lot of pressure, just like I'm feeling a lot of pressure. I feel a tremendous amount of pressure with all the pullbacks that we've seen recently. But I know that if I want to look for the risk reward going forward, am I going to buy the actual ticker? Am I going to buy Google, or am I looking for a situation where I have leverage? I understand what leverage is all about, right? Most of the banks and most of the larger institutions are trading on leverage as well. You can't tell me that they're not. I used to work at an institution, so don't tell me that they don't do that because I know what they do. I traded with $14 billion in front of my face. So don't tell me that they're not over leveraging. So in this situation, if you do want to take a position like this, the only thing that I would say is consider how much of your capital you're actually allocating. Don't be putting your entire portfolio in 1, 2, maybe 3 trades and then go from there like the crypto people do. Don't do that. Take a little bit of your portfolio, whatever you can tolerate. Just say 20%. And let's say I pull back another on GGLL. I pull back another 20% and you took a 20% position, then you can do the math. You're down 4% of your overall portfolio. If you can tolerate that, then I think the GGLL or the leverage shares position might be worth your time. Now, if you don't consider or you don't do that kind of balancing in your portfolio, then you really need to weigh how much money you're going to be putting in certain positions. I like the leverage shares. I have had tremendous success doing that with my portfolio. So if you're looking for those kinds of returns, how much lower can you go on GGLL or how much lower can you go on Google? If you trade back down another 30%, can you tolerate that? That is the question you need to ask. So if the answer is yes, then I would say, yeah, you can go with the leverage shares. What is the perceived risk reward here? If you can trade back up to 70, 80%, this might make sense. See what I'm saying? So 30% drawdown or more, because we don't know where the bottom is. For an 80%, maybe 100% gain, you have to do the math. Cool? What else we got, guys? Does anyone have any additional questions? I think everyone is okay, right? Yeah, I'll do the retracement videos. I'll actually I'll post the link after this. I'll post it in the stories about the retracements. Retracement is just a tool. It's not going to be the all of this is tools, right? Don't take any indicator at face value. All even indicators that you pay $10,000 for, it doesn't matter. It really doesn't matter. You have to. That's why discretionary trading still exists, because no one has invented an algorithm that is 100% self-sustaining. It doesn't exist. You can pretend that it does. It doesn't exist. We're trading with algorithms on the shorter time frames for sure, but everyone is tweaking their algorithms and everyone is tweaking their modeling and everyone is doing all these different statistical modeling in order for us to decide exactly where we're buying in. So I'll share the video, but this is my warning to everyone that trades the market. Don't just use 1, 2, 10, 20 and have all these conflicting ideas, right? Know what you're actually looking for, right? Intrinsic value. That's going to trump anything else that's out there. What else we got, ladies and gentlemen? All right, I went 10 minutes over. Relief bounce today. I might be looking at a relief bounce. I'm going to be perfectly honest. I'm going to tell you my game plan right here for... I already caught this trade, right? I just took this trade off. Is there a relief bounce incoming? There might be. There might be. So retracement levels or target that I'm looking for the upside is going to be 18,220. So I'm looking for that, but I'm looking for a pullback back down into these two levels right here. So for me as a day trader, those are the two levels that I'm looking for. And then I'm waiting for certain conditions to be met. Is there volume coming in? Is the CVD telling me what direction I'm going? And then also, are the 5 and the 21 crossing in my directional bias? So that's what I'm looking for here for the short term. I'm going to do a lot more day trading content because I know a lot of us like to day trade. I like to day trade as well, right? Day trading is awesome. I think it's awesome. If you apply the right risk reward, then, I mean, this trade right here that I took, this trade, it's just unbelievable. It really, I'm still like wrapping my head around. I can't believe that I actually took it. But I will be making more day trading content as time goes on. I want to make, there's more psychological content that should be coming out very shortly, right, on the YouTube video stuff. So I want to finite that. I want to finish that before we start talking about the day trading stuff. This trade would have been absolutely fine if I just held on to it. That was my entry right there. My entry was CVD starting to pick up. It detected volume, right? So there's the volume detection right there. And then we have a squeeze firing on the TTM. 3 indicators that are lining up and telling you the same thing. You fire the trigger on the trade. And then we're right off that snow line. So yeah, this should have probably held on to this. It is what it is. All good. What do we have, ladies and gentlemen? What do you think about altcoins? I am not the person to ask about altcoins. I think that they're all, permit me to say, I don't want to be insensitive, but I don't think they have intrinsic value. So anything that doesn't have intrinsic value, anything that doesn't have a business behind it, anything that doesn't have a balance sheet behind it, that is something that you can track, that is either growing or is just close to intrinsic value, I have no interest in it whatsoever. Not even a little bit. I don't even want to entertain the idea. The risk reward might be 10,000%. I don't care. I would prefer to focus on, and I would urge everyone as well. I know that I'm not wrong with this. I definitely know I'm not wrong with this. Focus on things that have intrinsic value. That's it. Cool? What else we got, ladies and gentlemen? What are your thoughts on Tesla? I'm not touching Tesla. I am not touching it with a 10-foot pole. Tesla for me is going to be, it's not even close to intrinsic value. It's trading at, I believe, at 90 times earnings or 100 times earnings. So it's always been overvalued. That's nothing new. But for me, 190. All right, 190 is the area that I'm watching. I don't want to trade Tesla in this environment. AMD, I already bought into AMD. I bought into AMD again yesterday. For me, it's a longer term investment. In my opinion, everything that I shared with you about the retracements and also the 5 and the 21 cross, you do not have a 5 or a 21 cross off of the 4-hour time frame quite yet. I bought into more AMD yesterday. I forgot to disclose that. I'll probably talk about that on the YouTube video tonight. I talked about it yesterday. So for me, AMD is a longer term investment. If you are considering to buying into AMD, I would give yourself a time horizon of at least 2 years. At least 2 years. Do not buy into it just because I'm telling you or just because you think it's low enough. Don't do that. Look at the daily and look at the weekly time frame. How low can you still possibly go? In my opinion, you can still go to $60. It's still there. At $60, I will personally average in and buy into more of my position. I'm already down a bag on AMD. I'm down a considerable bag. But I don't mind buying more because I think that there's value and there's infrastructure that cannot be replicated by none other than NVIDIA, in my opinion. ASML, obviously I understand. Micron, I understand all these other companies and all these other competitors. This is what a free trade market is all about. But AMD, in my opinion, looking at balance sheets and looking at horizons, in my opinion, 2 years on AMD. If you think that this is the area to buy in, just wait for that 4-hour time frame to show you 5 and 21 cross. Right? That's my trick. What else? Everyone good? If you got value from this session, please give me a thumbs up and say, Sage, you know, I maybe learned something here. If you didn't have value whatsoever, you can give me a thumbs down. That's okay. That's okay. I don't mind. I can take criticism. I've been in the hot seat before. No worries. I just want for those of you that are joining these sessions to listen to someone else that has a different opinion than you, right? Because this is not what's going on in media. Media doesn't want to listen to one another. But as traders, we want to listen to different facets and different pieces of information so we can reach our own conclusions and then make decisions that are based off of calculations as opposed to just straight up opinion. So if you felt that you gained a little bit of value with this session, just let me know. Thumbs up. If you didn't, if you think that I'm an idiot, no problem at all. I really don't mind that. I really, really don't mind. Then you can give me a thumbs down. That's perfectly fine. But that's all I have here for today. I have to get ready for the alpha session. I might be looking to catch some trades here. I see a trade brewing right here. I was already in this, so I don't know why I took it off. I think I took it off because I had this session on. But everyone good? Everyone's okay? Okay, let's call it a day, everyone. I really appreciate everyone being on. Watch out for the YouTube video that will be out after Power Hour session today. And I will continue to journal my trades exactly as I have been doing. Thank you so much, everyone. Everyone have a wonderful day.